the one thing we know is we think that long-term bonds are a terrible investment, and we, at current rates or anything close to current rates. So basically all of our money that is waiting to be placed is in Treasury bills that I think have an average maturity of 4 months or something like that at most. The rates on those have gone up lately, so that in 2018, my guess is we'll have at least $500 million more of pre-tax income than we would have had from the bills last year. But they still, it's not because we want to hold them, we're waiting to do something else. But long-term bonds, they're basically at these rates. It's almost ridiculous when you think about it, because here the Federal Reserve Board is telling you we want 2% a year inflation, and the very long bond is not much more than 3%. And of course, if you're an individual and you pay tax on it, you're going to have some income taxes to pay, and let's say it brings your after-tax return down to 2.5%. So the Federal Reserve is telling you that they're going to do whatever's in their power to make sure that you don't get more than 0.5% a year of inflation-adjusted income. And that seems to me I wouldn't go back to penny stocks, but I think I would stick with productive businesses or certain other productive assets by far. But what the bond market does in the next year, you've got trillions of dollars in the hands of people that are trying to guess which maturity would be the best to own and all that sort of thing. And we do not bring anything to that game that would allow us to think that we've got an edge. Charlie?
Well, it really wasn't fair for our monetary authorities to reduce the savings rates paid mostly to our old people with savings accounts as much as they did. But they probably had to do it to fight the Great Recession appropriately. But it clearly wasn't fair, and the conditions were weird. In my whole lifetime, it's only happened once that interest rates went down so low and stayed low for a long time. And it was quite unfair to a lot of people, and it benefited the people in this room enormously because it drove asset prices up, including the price of Berkshire Hathaway stock. So we're all a bunch of undeserving people, and I hope that we continue to be so.
At the time this newspaper came out in 1942, the government was appealing to the patriotism of everybody. As kids, we went to school and we bought savings stamps to put in. Well, they first called them U.S. war bonds, then they called them U.S. defense bonds, and then they called them U.S. savings bonds. But they were called war bonds then. And you put up $18.75, and you got back $25 in 10 years. And that's when I learned that $4 for 3 in 10 years was 2.9% compounded. They had to put in small print that, and even an 11-year-old could understand that 2.9% compounded for 10 years was not a good investment. But we all bought them. It was part of the war effort basically, and the government knew. You knew that significant inflation was coming from what was taking place in finance in World War II. We actually were on a massive Keynesian type behavior, not because we elected to follow Keynes, but because war forced us to have this huge deficit in our finances, which took our debt up to 120% of GDP. And it was the great Keynesian experiment of all time, and we backed into it, and it sent us on a wave of prosperity like we've never seen. So you get some accidental benefits sometimes. But the United States government then was urging every citizen to put their money into a fixed dollar investment at 2.9% compounded for 10 years. And I think Treasury bonds have been unattractive ever since, with the exception of the early 80s. That was something at that time. I mean, you really had a chance to buy, you had a chance to invest your money by buying zero coupon Treasury bonds and in effect guarantee yourself that for 30 years you would get a compounded return, something like 14% for 30 years of your lifetime. So every now and then something really strange happens in markets, and the trick is to not only be prepared, but to take action when it happens. Charlie, did you ever buy any war bonds? Or?
No, I never bought war bonds.
No. Used to be like, take me.
I didn't have any money when I was in the war.
Well, that's a good reason not to buy. Okay, Becky.
Your annual letter this year pointed out that Berkshire has become a leader in real estate brokerage in the United States. Congratulations. That is a significant feat in less than 20 years. But let me mention a sticky point. If fees charged by stock market active managers are a drag on investor performance, I would argue that real estate commissions are no different and perhaps more detrimental, especially when one considers the lifetime effects of large, foregone upfront cash flows and the power of compounding interest. I would be pleased to hear your rejoinder on the points I've raised.
Well, the purchase of a home is the largest financial transaction for a significant percentage of the population that they make, and a lot of people need a lot of attention, and you can show a lot of houses before you sell one. I would say this: if you look at our close to 50,000 agents now, I think they make a good living, or decent living, but I would say that people who manage money make a whole lot more money with perhaps less contribution to the welfare of the person that they're dealing with. So I don't think that there are unusual profits involved in being a real estate agent. I don't think there are unusual profits involved in the ownership. We like it because it's fundamentally a good business. But here we are doing 3% of all the real estate transactions in the United States, and we're making maybe $200 million a year, which well, we won't get into what the comparative efforts are in Wall Street to earn $200 million, but I think I have to tell them about Roy Tolles a little bit on this. Roy Tolles, for example, Charlie's partner, many years ago, decided he was going to want to buy a house in San Marino. He's going to have a number of kids. So he sent his wonderful wife, Martha, out, and for 6 months he had her look at houses in San Marino, and this was many years ago, and if they were priced at $150,000, she would offer $75,000. And of course the real estate agents were going crazy because they never were going to get something listed at $150 sold at $75. And then finally, when she found one that they both really liked, he had her offer something like $120, and the real estate agent was so happy to get a bid that was in the general area of the offering price that he would work very hard on the seller to take that bid, because he knew he did not want 6 more months of Roy bidding at the lower prices. So you don't sell them on the first trip. Incidentally, I had Roy buy a house from me sight unseen, because this was a guy that knew human nature. You don't get rich. Real estate agency is, people earn their money, and they earn it in a perfectly in a perfectly respectable and honorable manner in terms of what they get paid. And as in every single industry there is, there can be excesses or mistakes or that sort of thing. But we will continue to buy more brokers. In fact, we'll probably have another couple to announce before long. And we will feel that if we get to where we're doing 10% of the real estate brokerage business in the country and we're making $600 or $700 million a year pre-tax, we will not think that's a crazy amount of money to make for enabling 10% of 5 million people to change their homes every year in the United States. Charlie?
Well, the commissions in real estate may get unreasonable if you're talking about $20 million houses. It seems a little ridiculous to pay a 5% commission on a $20 million transaction. But do any of us really care if the kind of people who pay $20 million for a house have a slightly higher commission? The ordinary commission is pretty well earned.
Yeah. We have a number of brokerage firms. So the highest has their average transaction in one section of the country would be close to $600,000 a unit, but in terms of the sales price of the house. But in most of our real estate operations, the average price is more like $250,000 or something in that area. And you can show a lot of houses to make one $250,000 sale, and of course you split the listing company and the selling company are usually two different companies. So it does not strike me as excessive, and incidentally, it doesn't strike the people in the industry that way either. It has not been particularly susceptible to online type substitution or something of the sort. The real estate agent earns their commission in most cases, but Charlie's had more experience with $20 million houses, so he will comment on that area.